Hey everybody, welcome to the Federal Reserve's Decision Day. This is a major day here for us here at VerifiedInvesting.com to bring you this live event as well as potentially trade it. I'm going to give you the live analysis as it unfolds. And again, guys, it's our pleasure. Federal Reserve Decision Day, first time in something like, 4 years where the Fed is going to be cutting interest rates. So this is a big one. So I have my whole setup here. I got my trading stuff over there. We've got our board here where I'll be showing charts. I've got my live trading account right over here. In fact, follow me over here. Let's take a look what we have right on this board here. This is my account. And again, just to go over it, I got them ready to go. You can see I did a few little trades today. Carvana, Apple, UAL, Spiders. I was just messing around ahead of the stream just to kind of give you guys to make sure that everything would go off appropriately. But again, I'm ready to go here. I got no positions at this point. So we'll see if there's any opportunities here in the trading day or in the afternoon to take a trade, all right? So again, I'm all ready to go, excited to get going here. Markets, again, are expecting a 50 basis point cut. It had gone down to about 55% favoring a 50% cut or 50 basis point cut, but now it's back up in the 60s. So again, markets are expecting 50 basis points. Therefore, you guys know what that means. If we get 25, markets probably initially sell, but then we'll see what happens after the initial reaction. Remember, the algos will be trading first. They're the ones that get in before any of us even have time to click a button. They'll react to the verbiage of the statement, and then obviously at 2:30 we have the press conference. So let's go over into the whole hubbub over here. Let's take a look. In fact, let me just unfreeze this. Apologize there. Let's get some action up. We got our charts coming up here in just 1 second. And again, we are just minutes away. So what I'm going to do here, guys, I just want to go over my levels. Follow me back to the chart here. I want to just draw on this board here as we go through. So I've already marked off my levels for trading, right? So I'm looking at a trend line right up here, right around 567. That's going to be a potential short level. If we dump out a high risk level is right around 559, maybe just a little bit above that level, and then we got a below 556, and then the major level at 548 and a half or so with two trend lines converging. Now, if it goes above 567, I have a couple levels, but I have to zoom out on the charts to be able to capture that alpha there or potentially short into this move. All right, now again, the thought process is simple. Basically, at this point, I'm thinking that if they do a 50 basis point, markets initially surge to the upside, and then after the surge, I think you see selling back to the downside. So that would be my game plan. If we see a pop here into this level, start small because it could go a lot higher. Remember, this is volatility, folks. This is dangerous trading environments. But nonetheless, let's watch very closely there. And if they do a 25, I think you dip down here, maybe here. But then afterwards, people could say, okay, at least they think the economy's not so weak. All right, let's follow me back here. Bear with me, guys. I want to just get everything crystal clear on the charts, unfrozen, in case you guys need to see that. All right, so we're waiting the Fed. We got about a minute and a half to go on the Federal Reserve. I'm getting all situated back here in my cockpit of sorts. I've got my trading platform up, my screens all here with charts on it. I'm watching to see what the Federal Reserve rate decision will be here. And again, we're going to be watching the U.S. dollar as well. The dollar is going to be key. All of these type of things are going to be very, very key. And we'll flip back from me to the charts as I'm going through some of the charts. In fact, as we go through this, I'll probably have the charts showing up on the screen. Okay? Alrighty, so again, I'm going to be watching the U.S. dollar. If we can get a picture up here of the chart over there, just to show you guys. There we go. So we have the spiders up. I have the dollar up, the 10-year yield, gold, silver, the Qs, and Tesla. Tesla's been a little active today, so we'll keep an eye on that. But again, we're watching here. As we zoom in, we can see right here, we're just chopping around. It's been a whole lot of chop from this early morning kind of rollover going into this decision. All right, 30 seconds away, guys. Let's see. Again, I've got my order out already at 567.07, so we'll see what happens there. If it pops up in, I'll take a short on that. That's that yellow trend line right up here. And then same thing, I don't have an order out yet on a dip because I'm just a little bit kind of a question mark in case I'm not loving the trade. But I do want to have it all preloaded on the screen, all right? So again, I'll be ready to go here, 559 and change on this stuff. All right, here we go, guys. All right, initially, not much movement, minimal movement. Here we go, starting to move up. Let's go. All right, here we go. Let's see, can we push up to 550? 567 Pierce is what I'm looking for. Got up to 556 here. We're just about at 556. Oh, come on, a little bit more, a little bit more. Let's see if we can get up there. All right, so this tells me, let me see here. I don't have any, let me see if I can find out here what the rate decision is. Bear with me. All right, guys, it's pushing up again. We just kissed my level. I did not get filled. It didn't pierce the even number. Let's see if it pushes. All right, guys, I am in. I am short the spiders here. I am short the spiders. If you want to go and show the account here, I am down on the trade about $300 right now. Let's see what happens as it comes back in. All right, so I am short. Let me bring up my levels. You always want to be prepared. 565. Let's go there. Ooh, it's pushing up more. That's okay. Not a big deal here. Let's see if it gets a little bit higher. I'm going to add to my short, guys. Real trading here, guys. No doubt about it. All right. I just added to my position here, guys. I just added to my position. My average is 567.72. 567.72. But what a surge on the markets. My next add level will be above 569 as we're pushing up initially. Remember, this means 50 basis points. There was a 50 basis point cut, which is expected, right? All right, here we go. We're starting to come in. All right. All right, let's bring it down here. All right, guys, I took off half the table for only a small gain, about a $400 gain. I'm going to ride the remainder here to the downside. Riding the remainder. This way I leave myself the ability, should it go up, that I can actually add to the position. If it comes back in, then we'll get out of that position there. Let's bring it down here. There we go. All right. So again, I'm still up on the second half here. We've already protected ourselves with a little bit of the first half. Let's see if it comes back in a little bit more. Notice again, this is so far playing out how we thought. Now the question is, what's the ultimate direction on the market here? All right, guys, I am out of the trade. All right, I am out of the trade. I just got out at 566.77. Ended up making about $1,350 on that trade. Again, let me jump over and let's dissect this, guys. All right, so let's go into this. All right, here we are. So essentially, this is exactly what I choreographed, right? I said 50 basis point cut, markets are going to pop because you're going to have the excitement of it. But what does a 50 basis point mean? It means, maybe the economy's not so good. So you get the initial pop, then the pullback. We shorted here. I added right up here at a 568 pierce. So one here, brought our average right in here. We took half off at just in the money slightly, and then the remainder off right down here. Boom, boom, boom. $1,300, almost $1,350 right there for that account, all right? Now listen, could it come and look, it's coming back in even more now, but that's okay. The key is trading what you know and the levels. That is a case in point case study. Notice how I didn't go all in on my first buy either. That's one of the things, the principles that we teach here at Verified Investing is that I could have the best level in the world, I may be wrong. And so how do you mitigate being wrong? Well, you got to leave yourself room to add, right? And so there you have it. So again, look at this pullback here as it's coming back in. Now, I'm going to jump back because I want to see if there's any new trades. What if we start to fall tremendously? But case in point, a beautiful trade right there, guys. That is awesome. All right. Lawton, you get that one for them? Beautiful, beautiful. He's in the day trading room, gave it to them as well. They got that one. That's awesome, guys. Fantastic. All right, so we are coming back in. Beautiful fall here, 566. Incredible. Incredible. All right, let me see what else we have here, guys. I'm just kind of scanning through. Now, if we fall, if we start really selling off 559, I'd still buy that on a pullback here if we get down there. All right. We have all our levels ready to go. Let me go to the 10-year yield. Let's look at the 10-year. Oh, wow, look at that. So 10-year upticked into the number, then flushed, and now it's rebounding. That's why, by the way, markets are going inverse to this. Now we're starting to come down. That might mean the markets start to push up again if we pull back a little bit more. U.S. dollar, look at that drop. Beautiful drop on the U.S. dollar, coming down a little bit more. We were in this kind of sideways channel. Let me draw this in for you guys here. Okay, if we draw this sideways, boom, right to there. And I must have hit a button twice there. So you see it's trying to break down out of that little bearish, choppy, sideways action. Let's take a look at gold. Gold did get a pop, but not that big. Gold basically right back to the recent highs. On the daily chart, there's a trend line of resistance right there. And then silver, same thing. It was down earlier. Now it's green on the day. The QQQ starting to try to push up here. I'm going to go to the 1 minute so we see a little bit more action here. There you go. They're on the 1 minute. Look at that. So sometimes it's good to go to the 1 minute when you're trading really precise short-term moves because you can see the price action a little bit better on the 1 minute. I know Dr. B is happy about that. He's a big fan of the 1 minute trading that time frame. And you can see, again, we pulled back. Now we're starting to inch up a little bit. Let's look at Tesla. Wow, Tesla. Tesla popped to 234.5 here. All right, let me just mute the TV here. And again, folks, the idea here is we still have 25 minutes. I'm going to be right here with you guys going into the Federal Reserve speech by Jerome Powell. We'll bring that to you live. Again, I'll probably cut out. We'll just hear little snippets because for the most part, I want to see what he says about certain things, and then I want to trade it if there's an opportunity. All right, but a nice little trade there on the spiders. Again, very, very good. Now, again, if it wasn't the Federal Reserve, would I have gone heavier? Would I have gone double the share size that I was doing? Probably. But we have to be aware that when there is an announcement, it's like earnings, right? The volatility on an announcement, if it doesn't go your way, you can't blow up your account because of it. And so that makes me go a little bit lighter than I normally would on an S&P trade because of that risk. And because of that, I was still able to make good money. I mean, nothing to sneeze about making $1,340, I think $45 or so is what I cleaned up on that one there. All right, let's go back to the S&P 500, which is still chopping. Now, what may happen here, folks, is we may end up, let me go back to the screen here, will follow me over here, is it may end up being is that we just kind of chop sideways now until Jerome Powell starts to give his speech, and then the next move, either up or down, could come in. Now, would I short the market if let's say we get back to the highs here, would I potentially short it going into that speech? I may. I'd have to see what the price action is leading into it. Are we making some sort of bearish channel? What type of price action on the 1 minute? But again, right now it went a little bit lower than where I covered it by about $1, but really you can see now it's just in that range. That's your optimal as a day trader. And by the way, it's kind of the same for swing trading, just on a bigger time frame. But for day trading, it's all about that immediate move. The best opportunity is that immediate move. Afterwards, it gets a little bit trickier. You know, you get the market kind of lackadaisical, kind of sideways chop. But either way, we can see, look at the trend line that I had in, right? Yeah, pierced it, but we had mitigated for that, right, in the trade. Pierced it, added to it, boom, there it goes. So we're starting to come in a little bit more here as, again, the market is digesting a 50 basis point cut. And what I said before is super valid. If I'm looking at the general public, I think the initial reaction from retail, and this is why I always try to be frank with you guys and say, you have to start thinking not as retail investors, right? It's not that being a retail investor isn't good. I mean, I'm kind of a retail investor too, but you want to think like an institution, all right? And the institutions are thinking, and look at this, guys, as it comes in, they're thinking to themselves, okay, 50 basis point, retail piles in. Yay, 50 basis point, yay, this is great, free money. Wait a minute, not so fast. Because what does it mean? It means the economy is weak enough to force the Fed to cut 50 basis points. That's not good. All right, again, lower growth, recession potential means lower earnings, which means multiples have to come down on stocks like Apple, Nvidia, Microsoft, etc. So that's the kicker. And look at this, guys. Markets are giving it all back here on the charts. So if I see anything, I'll let you guys know for sure in terms of a technical point. If you're really aggressive, you want to know the level right here, there'd be a level right in this area right here to play. If it pulls back into that, we can take it off here. Let me unfreeze it just to see where we are. Yeah, it's still kind of chopping, but that area right there would be a little bit of a zone here. You can see right before the Fed, we chopped there. That was also the high of the day. On a technical basis, that's going to be support there. And again, I don't think I'll play that because I shouldn't say I won't, but probably unlikely. I don't see the risk reward being good enough for me. I mean, maybe it comes down here back to the flat line. I guess maybe it goes down there. But again, with the risk of Jerome Powell saying something dovish that the market likes and maybe reestablishing that the economy isn't that weak, it could shoot back up on me. So risk reward would not be amazing at that point. All right, I'm going to take a look at a couple other charts here, guys. So let's walk back in here. Let's just go to the 10-year yield again, which is only minorly changed. Like we're at 3.675 right now. That is not a big move. The dollar continues to stay weak. Gold is trying. It's trying to break out here, but still no breakout. Oh, Bitcoin. Let's, of course, go to Bitcoin here. See what Bitcoin's up to. Bitcoin pierced the trusty pivot line, but it is still, look at this, guys, right there. See that? it still is unable to get through. Now, maybe by the end of the day it will. We'll have to see. I mean, it's still a lot of time left in the day. But right now, it pierced and getting rejected again. Man, it's tough times for Bitcoin there. Although if you look at the altcoins, that's really tough times. Now, silver's interesting. Could silver be on the verge of a breakout here? All right, that's a little bit more interesting there as it's peaking up. But again, we need to see where it goes, and it also needs to confirm above that level. The QQQ on the 1 minute, you can see here again that big initial move, and then the doji. This is called a doji, kind of a small narrow range bar with a tail on the top and bottom, little doji. It's usually a reversal signal in charts, and then we've come down just a little bit. Now, what's interesting, this could actually be forming a bullish pattern. I'm not trusting enough to play it, but if we look at this, this would be an inside bar, what we call a green bar here. So a wide range green bar with lots of sideways chop. Well, the way you'd play this if you wanted to, you'd buy at the low end. If it comes down in here, you could play it off this low end of this parallel channel. I need to do my parallel channel a little bit better, though. We would bring it exactly to that first low right there, and that would be your spot. And actually, what's interesting about that, that's actually right at technical support as well, just kind of like the spider's level. If we draw that out, you can see right in there, right from that pivot high right there. So, again, let's keep an eye on it. Man, it's teasing me. It's teasing me, wanting me to go long if it pulls back into this level. Here it comes. Oh, man, I don't know. It's risky. Markets are so overbought. I'm going to load up a potential trade just in case on the Qs. I could always do a small position on the QQQ. Oh, I loaded 1,000 shares. I wouldn't call that small. And what are we at? 4? Wow, we're falling fast here. Let me see here. Well, it's risky, man. I don't know. This is the stuff you have to deal with, right? As a trader, you're constantly analyzing risk, reward, risk, reward. What's my risk here? What's my reward here? I mean, these are the things that you're analyzing on a real-time basis, and you got to make decisions sometimes in split seconds. Here we come, guys. We're coming in here, coming in to the downside. Wow, look at this market reverse. This is what I was wondering if this would happen. All right, I'm too late to the trade, but we just touched that level. Put it down there. If it comes back in, what was the low on that candle? The low was 474. All right, I just got in, guys. I'm not loving this, so I did a half of what I did before. I'm long 473.83, 473.83 on the QQQ long, 473.83. But this is a nasty little sell-off here. I'm not even going to look for too much on this. Come on, a little bit more of a bounce. Let's go. I'll put it above 50 since I'm only doing 500 shares. All right, I'm out. It just filled me at 470, 437, guys. I'm out of the QQQ. All right, so, yeah, I made only 258 bucks there. I mean, that's play money right there. Well, I don't mean it like that, but you guys know it's not like the normal gains. But honestly, that looks like it was a good exit. All right, I'll jump over here. Follow me over here. Let's talk about this trade. So basically what I was looking at, we knew we had this high right here, we had this low right here, and we had this area right in here. So as it came in, I said to myself, all right, it's piercing number 1, piercing number 2. I'll give it a shot at number 3. Give it a shot. You know, a little bit of a bounce. So there's 2 for 2. Again, just modeling. By the way, if you're in the live Apex day trading room on a regular basis, these are things that we're doing. Now, some days we have 0 trades. We had 0 trades this morning because it was so slow, everyone was waiting for the Fed. Other days we have 7 trades in the morning session. So it's really all about what's going on here. But again, we'll keep an eye on this. Ooh, it's coming right back in. All right, so now there is another level here on the QQQ. This low pivot right here, if it flushes out, that would be your next technical level for a quick day trade scalp. And yes, it's quick, guys. When you have these Fed announcements, it is very quick price action. All right, speaking of quick, I got to pay attention here. I froze the screen there, but now it's pushing up. So nothing to do here, nothing to see here. Just watching very closely. Now it's pushing up. Holy cow, here we go. By the way, the 1 minute makes things look really fun because it's on a 1 minute basis, so these candles can move very, very quickly. Plus, it's on the back of the Fed cutting 50 basis points. Okay? So let's watch and see what we got right there as it pushes up. So what does this tell us? Well, let me redo my parallel so it's exactly to these highs, but that would give us a resistance. So I'll come over here and let's just really quickly adjust. So I think I would do it right there. We drag that down. There we go. All right, so resistance on the Qs, and again, a down-sloping inside bar is kind of bullish, so I probably won't short it, but again, nonetheless, the level of resistance you're looking at is around 475.85. 475.85. Nice bounce here on the spiders as well. Spiders erased the entire Fed move. Now they're bouncing back up just like the QQQ. All right. Look at that move coming on the Qs. So nice push. Now, would I reshort at any point on the Qs? The answer is yes, but now I look at the double top. Right, and it's a long way away, I understand, but with the volatility here, by the way, Fed 11 votes in favor of decision. Governor Bowman dissented, preferring a 25 basis point cut. All right, so again, basically almost all the Fed officials were for 50 basis points. Markets, the Fed Watch tool was telling us that, right? I mean, that's fair. The Fed Watch tool was telling us. All right, jumping back to the charts. So what we're seeing here, we came right up underneath right here. We're now kind of pulling back, but let's watch and see. If we break out, and I'll just quickly go away, this remains my big short level, which is around that double top right up there. Again, downsloping channels, essentially something like this, tend to break up, so it wouldn't shock me. The only way that gets negated is if this here, if we get a break of this low of this area right here on a closing basis, then that would cancel that bullish inside bar pattern out. But right now, it kind of came up to the underbelly of that parallel channel and pulled back just a little bit. All right, so we're watching. By the way, I got to do more of these live tradings. If you like it, please comment in the comments that you want to see more of the live trading with me. I definitely could do it maybe once a month, maybe twice a month. We could figure it out. Here we go. We're right into, so we just touched it. Let's see if we get a breakout here. Let's see. By the way, do I chase this breakout? The answer is no, because you have 1, 2, 3, 4 green candles already. It's already short-term extended on the 1 minute. So if it goes, it goes. So be it. Let it go. The risk reward is not worth it of going long here when you could have gone long there. In fact, we did go long there. I just took profits right here, right? All right, so again, just being patient. Let the charts tell me when to make a trade. I don't tell the charts. The charts present opportunities to me, and I decide if I want to take that trade. All right, and by the way, it's not an easy feat to be able to trade live in front of you guys. It takes some guts, no doubt. But again, I've done it since 2007 with the live day trading room. So again, you can always check that out. And by the way, we do offer those one-day free passes or 1 week. Really, 1 week is the key to do because you really get the full sense. If you choose a 1 day, it's okay. But the kicker is if it's a slow day, you're like, oh, well, I don't really get a good sense. By the way, nice little breakout. See? There we go. So you got your down-sloping channel that favors the upside so far. Now the question is, can we rally up here and maybe get another short off? We're watching. We're still about 12 minutes away from Jerome Powell's press conference. Again, I'll bring that live. And that's really where the market could get a little more crazy. And I mean, it is kind of whippy right now, but we're going to watch and see what happens here in just a little bit. Now, my guess is, let's talk about Jerome Powell. What's he likely to say? Well, my guess is he's not going to be like, oh, the economy's in the tubes, right? It's down the toilet. He's not going to say that. He's going to probably try to reassure people that the economy is okay. If he doesn't, then the market, I mean, if he literally comes out and says, yeah, things aren't looking so good, you're going to see that, right? I mean, that's going to happen because that would just reinforce the 50 basis point cut of why the Fed did it, right? The economy's hurting. And to be honest, I think we all know the economy's hurting, at least in the lower 50%. Maybe in the upper 50 where people have lots of investments and all this stuff, maybe not. But either way, again, nice little move here continuing, okay? All right, I'm just trying to look at this pattern formation, seeing if there's anything else that I'm missing. There's no head and shoulders. There's no anything else. Nope, just not much going on there. So let's just leave it be as it continues to trade here. I'm going to jump over and just take a look at the U.S. dollar, see what else is going on these charts. The 10-year yield's starting to come in. That makes sense. You guys see that relationship, right? So if we go to the chart, you can see the 10-year yield's moving back to the lows like there, and therefore the markets are pushing up. So right now we're seeing this inverse relationship between the markets and the 10-year yield, which actually it has been different recently. Dollar is moving lower. Let's go to the 10-minute dollar chart. Oh, yeah, look at the dollar making new lows too. All right, and Bitcoin's trying. It's right up to that level right there. Look at that, guys. You're so close to that level. Can it bust through? And silver's still looking okay. And the QQQ, again, back to the Qs, is pulling back just a shade. Okay, So we're just kind of holding steady inside of this range. And I don't mean the channel, I just mean from the first candle low to the high. So from this low to this high, we're still inside of that move. And really, I think that's going to be your kicker for which direction this market goes, right? So if we put this and we put a trend line here, right? So this is the low to the high of the next candle, so the high to low. And so the question I would have is, well, which way does the market eventually go? Does it break out to the upside, in which case, okay, well, that's a breakout. I'd probably be even very cautious shorting that. Maybe I'd try to get a quick scalp again, like on the Qs, on the lows. But if we come down and break the lows, then I think this market's in trouble. And if again, we start to see that fear sweeping in about, is the economy struggling enough where it made sense why Jerome Powell? And I think, honestly, again, just going back to Jerome Powell's comments coming up here, I think my guess is he's going to try to reassure people that the Fed didn't do 50 basis points because the economy's struggling, but because they felt it was time to be less restrictive. Now, again, to me, they go hand in hand, right? I mean, if the economy wasn't slowing, why would they need to become less restrictive? But my guess is he's going to try to thread the needle. The question is, can he thread the needle? Will the markets believe him? We're going to find out in just a little while here, guys. All right, but markets, again, floating up beautifully. Floating up beautifully. All right, Tesla's moving up nicely here. I don't see a day tradable level on Tesla. Let me just look. It did hit kind of a double top up here. So that made sense of why it pulled back when it did today. But now it's kind of climbing back up. Let's look at Apple real quick. We'll check in on NVIDIA. Let me get rid of my after hours data here. And don't forget, guys, I'll be on it trading the close. So I'm going to take you guys to about 2:45 p.m., so another 25 minutes. And then I'll be back at 3:55 to summarize in trading the close. As always, awesome stuff right there. Okay, let me see here. Apple. So Apple's up a little bit here in the post period. Good move so far. Let's look at the Dow. How are defensive names doing? Is the Dow doing really well? Nah, the Dow's kind of same as everything. I've been keeping a close eye on Walmart lately. Walmart's so overbought. All right, Walmart's coming in. So Walmart's coming in, and that's more of a defensive name here. Let me look at the daily chart. Yeah, daily hit the high end of this channel right here. That's pretty cool. So it's coming in. I think Walmart has a lot of downside. I still can't believe Walmart's trading at a 40 forward PE. I mean, like, what the heck? It's Walmart. You know, you're not going to get AI chip growth out of Walmart at this point. Hey, listen, I should say, and I should never say never. You never know what Walmart can debut, but unlikely that they could generate that, right? So, all right. So just 2 trades here, but nonetheless some money made, and just watching to see. Looks like November expected cut is 25 basis points, probability 62%. And then December is expected to be a 50 basis point cut. So again, remember, this was the last cut before the elections. So now we have the elections in early November, and then right after the elections, the Fed has their next meeting, and right now it's looking at a 25 basis point cut being expected. All right, but a lot can change. It's about 6 weeks, right? I think it's just around 6 weeks till the next meeting. So economically, we'll have 2 jobs reports, I believe. And then multiple CPI, or at least one CPI report, and so on and so forth. All right. Markets are stalled here, not much going on. 1 minute chart. And so what's going on now, folks, just to be clear and kind of walk you through the mentality as a trader, is that the markets now are basically coming into this period where we're now just waiting for the Fed, right? So what are you doing? You're going like this, okay? And that essentially is just telling us that, okay, the initial move is over. Now we need to hear comments from Jerome Powell, which maybe then trigger either this or this. And honestly, as a trader, I'm done trading now until we get those comments. Now, if you get a reactionary move, a big move up or down, there might be another trade for me to have. Okay, so again, just keeping an eye on that, and we'll watch it closely. Now, the one thing I'll just point out here is, and again, this is just a 1 minute chart, but I like being able to teach you guys as we go. Technically speaking, you have a green up candle, a reversal red, and then 3 inside bars. That's slightly bearish. That would be the beginnings of a bear flag, what I would call an immature bear flag. So we can always watch and see. I don't know if it'll play out, but we'll just watch and see. But you get this reversal candle right there. Usually that's pretty powerful. And then if you get these inside bars, it might mean that we kind of trail off into those comments in just a few minutes. And looking at the time here, we got about 5 minutes until those comments. And again, we'll go live for those comments to Jerome Powell. Whew, tiring, tell you. It's fun though. There's nothing better than trading, being a trader, guys. Ask anyone who's a trader that's listen, it's not all fun and games. I don't want to sugarcoat it. Most of the time it's fun, especially once you get good. I still have losses. I still have struggles. I don't think you're human. You're going to have some emotion, even though I beat it down so hard to kind of get rid of that emotion. You still have it to some extent. You still want to win. You have that even though you should sometimes cut the loss, you hold it for longer than you should. So there's lots of things that a trader has to deal with psychologically and then technically, right? The technical analysis is the easy part, frankly. It's this part up here that you're always battling as an investor and trader. But when you get to be a good trader, there's nothing better in the world. To be able to do this from Hawaii, from a beach somewhere in the Caribbean, from Europe, from wherever you may be. Heck, I was in Dubai for that a couple years ago for that conference, the Bitcoin conference, and I was trading there. It's nothing better than that, being able to generate some income. So pretty cool job. And again, what it takes is education. And we obviously, my goal here at Verified Investing is to make sure that we offer the right things for a trader or a prospective trader to be able to educate and learn how to do what I do on a daily basis. All right, still technically an inside bar pattern. Let's see if it starts to move down here. If you get a 1 minute close above the red portion, it would negate that pattern. Okay, so you see how my mind's working. I'm always looking at the pattern formations. What is it telling us? Because again, what this is doing is it's constantly changing odds. So, right now when it was like this, the odds were probably like 60% downside, right? All right, then it kind of went up maybe 55%, but it still was favoring downside because it hadn't failed. If it gets above here, now it favors the upside and it flips. But again, the best example I can use is, think about if you ever watch World Series of Poker when the cards get dealt and on the screen they show you those percentages and then the next card gets flipped over and the percentages change. That's what my brain is constantly doing with everything we're seeing. So here we go. Starting to see this coming down here. All right, now where would support be? Well, what we can do is we can look and say, okay, and I'm just drawing this in. I'll draw it in on the computer, but basically you have this down sloping. So if we came down into here, this would be technical support there, which by the way is also double bottom, interestingly enough. So anyways, again, I usually do it on the computer, but it's down ticking a little into Jerome Powell's comments. And again, we are now just 2.5 minutes away. Let me jump over here, keeping an eye on things. Do a quick check-in on the U.S. dollar. U.S. dollar is getting a bounce, so it makes sense why the markets are pulling back a little bit. Same thing with the 10-year yield. The S&P, right in that range. Take a look at Bitcoin. Bitcoin's still stuck under there. Silver's still holding up. Walmart's still slightly green on the day. All right, let's keep an eye here. We'll go back to the Qs chart just to see. Right now, the QQQ is bouncing just a little bit off those lows that it was down ticking into this comments, all right? But again, we will be going live in just a minute here, or just a couple minutes when he comes out. A little less than 2 minutes now. All right. So taking it down, taking a deep breath before we get into the action here, since this could get intense again. We'll have to see. And by the way, is there a chance that there's no trades at all? Heck yeah. And you know what? I'm okay with that. The best traders in the world understand that sometimes there will be no trades. Sometimes the best thing to do is sit on your hands and do nothing. It's usually when you're younger as a trader, and I don't mean age-wise, I just mean as a newbie trader, whether you're 50 or whether you're 20, doesn't matter. But there's this gambling mentality like you got to always be in, and that actually is a detriment. As you start to mature as a trader, you begin to realize that trade less to make more. And because again, when you trade more, you're not taking the most optimal percentage trades. All right, 1 minute here, guys. I'm going to bring up the stream that I have here. Watch live. We should be just about ready to rock and roll here. So we'll get that all set for you guys. Got my earpiece ready to go. ARM Holdings having a nice day. I'm just looking at some of my other screens here. What's going on? So by the way, one of the things I just did, which is key for a trader, is I just looked at my open positions, meaning my orders, and made sure there was nothing open, that I didn't forget. Because sometimes, even at this state of my career, 25 years in, every so often, like once or twice a year, I'll forget to cancel an order and it'll get filled, and I'll be like, oh, dang it, I didn't want that to get filled. So these are pitfalls as a trader. You always have to be thinking like, okay, do I have all my bases covered? And that was just something that I naturally did. I just looked down at my open orders, my not unfilled orders, nothing there, everything's canceled, giving me a clean slate to watch for a reaction. All right, here we go, guys. All right, Jerome Powell, we're waiting for him to come out. So far, he hasn't emerged. He's hiding. All right, well, if he's going to take a little while, we can still talk some charts. Spiders are starting to inch up just a little bit. Oh, here he comes. He's walking to the podium. Okay.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state. Inflation has eased substantially from a peak of 7% to an estimated 2.2% as of August. We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a half percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up, but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed.
So far, very rosy in
terms
of
a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship
Bitcoin's
as it
making a
erodes
little bit of a
purchasing
move here.
power, especially for those least able to meet the higher costs of
I'm going
essentials
to bring
like
us
food,
back to the
housing,
charts here.
and
We can still
transportation.
maybe, I'll listen in a little
Our
bit here,
restrictive
guys.
monetary policy
But
has
we
helped
are seeing the
restore the
Qs
balance
begin to
between
push up.
aggregate
Next
supply and
resistance on the
demand,
QQQ
easing
is going to be
inflationary
here at the
pressures,
highs.
and ensuring that
But look at
inflation
Bitcoin. Bitcoin
expectations
finds
remain
itself
well
back
anchored.
above. If we jump to
Our
the
patient
charts here,
approach over the past
back
year has
above
paid
this level
dividends.
right here. All right, so
Inflation
again,
is
we're
now
back
much
above
closer to our
61,000, which
objective,
is the pivot
and we
line.
have gained
Remember, we
greater
must
confidence that
confirm above it.
inflation
So even if we
is
close above it
sustainably
today, it's not a done deal. It needs to confirm above, but right now we are above. Let's look at the dollar. Ooh, dollar's going lower. It makes sense why the markets are moving up. 10-year yield also going lower. So again, essentially, he's saying all the right things at this point. Let's go back to the spiders. Spiders are pushing up. We're still way off the highs, though. Well, not way, but
In light of the
quite a
progress
bit
on
off the
inflation and
highs.
the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by
Oh,
a half
coming in
percentage
now.
point
Coming in a little bit.
to 4.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving
I
toward
got a trend
a
line
more
for you guys.
neutral
Check this
stance.
out on the chart.
We are not on
Look at
any
this, right
preset
here.
course. We will
Look at where
continue
we
to
are.
make
So
our
this is a
decisions
key pivotal level
meeting
on the
by
spiders,
meeting.
guys. Key pivotal
We
level.
know that reducing
All right, I've heard
policy
enough of
restraint
him for
too
now.
quickly could hinder progress.
All right, so jumping back, I'm going to come over here to the chart. So notice what I did here. On the 1 minute chart, I was able to isolate down this low and these three lows, and it gave us this low. So if the market breaks this and closes below, look for a bigger move down. But if it's able to hold and then we can move up and take out the high, then again, you should at least retest that high up there. All right, so we'll keep an eye on this. Let's see what happens. We're right here. Man, this market looks like it wants to break. I don't have a good signal. This is one of those times where I don't have a good signal to go short. But look at this starting to go now. Let's see what happens here. Markets are beginning to dump. Let's see. All right, so we closed below. Let's see if we confirm on the 1 minute. Next support on the 1 minute is going to be down here, followed by this low. Might be tradable down here at this low if we get there, guys, all right? Popping it right back up. So this is that whippiness. It's why I trust confirmation above all else about a real breakdown or a fake out. Trust me, the algos and the institutions are like, all right, how can we mess with them a little bit? I'm not saying us directly, and I mean, they might be watching, but I'm talking more about retail in general, right? All right, we could also do this line here, guys. We also could put this one in here, connect it through there. So you're basically in this other wedge pattern here. Take that away for the time being and unfreeze it. Pushing up a little bit here. All right, here we go. Let's see. Now it's starting to rally back. Still nothing to do. It's a lot of chop. This is chop. This is where, honestly, traders that aren't experienced, they'll get whipsawed. So again, Fed meetings in general, if you're a new trader, I would sit you down and say, you're not trading the Fed meeting. You don't have the experience. Because even when I traded, it's difficult. All right, nice little move here. We'll see what happens. It's interesting, this was that line originally that I started that short at, remember? The Pierce of 567, the first trade we took. That was right here, and look at where the market, so it went here, we shorted, went up here, we shorted, then it came in, we made our money, and then look, it went right back there. So that's why these technical levels that are drawn on are important. In fact, let me show you guys on this where I got that level from, just so you guys can see, you know, the importance of it. Well, let's go to the 10-minute chart, and if we zoom out, there you guys go. All right, so just coming back here. So basically, I did what I did to get that level. That was my first entry on my short, remember? Was right through here. Line these up. It connects right through that high, gave us that high right there. So there's all mathematics. It's not like an arbitrary level where I'm just saying, oh, I think it's a good short here. No, I got to have factors. I got to have technical factors. Otherwise, there's of no use, right? You're just basically, you know, guessing. You're gambling. You might as well go to the casino. That's my favorite saying, is that if you're going to gamble, go to the casino, go hang out with your buddies, go have free drinks. Most casinos give you free drinks, some don't, but we don't go to those. But in any case, you got to have, like, if you're going to gamble, go have fun doing it. What I'm doing here is work. This is work. I'm generating wealth. All right, now listen, there are people out there that are great poker players. They can do that too, but I'm not one of them. I follow the charts to be able to do well. All right, so let's jump back over here. I'll stay on for another couple minutes, then we'll end it for today, guys, as Jerome Powell, again, is holding his comments. We're just a whole lot of chop. You can see all the chop in the charts here, guys. So you can see just a whole lot of sideways chop. Markets, by the way, overnight will digest things. So we'll kind of take it one step at a time and watch to see what tomorrow's action. I'm going to update you guys in trading the close today. And then obviously in the game plan tomorrow, if there's any new trading opportunities, we're going to analyze Bitcoin, see where that closed, gold, silver, you name it. We'll go over all of that. All right, guys, I'm going to take a little bit of a break here. It's pretty intense, getting a little warm here as well, but thank you so much for tuning into this live feed of the Fed decision, me trading it live with you guys. Glad I could deliver a few trades to show you guys what I do, how I analyze, my thought process, all of that stuff. If you like these, comment that you like them in the comments so that we know, and we will do more of them for you guys. Hopefully I can even round up the other traders here in the office. Maybe we'll do a big jamboree, a big trading event here inside the studio live for you guys. All right, thank you again for supporting Verified Investing. I appreciate each and every one of you. We'll see you soon. Take care.